Famous value investor Benjamin Graham said to buy your straw hats in the winter. Hi, I'm Ryan Dietrich, the Chief Market Strategist with the Carson Group, and welcome to your fourth quarter market update. So where do we want to start? I think I'm going to do a little review of the third quarter. Stocks can go down apparently, but then we're also going to talk about, similar to that quote where I started things off, to buy your straw hats in the winter. There might have been some pretty good opportunities in the third quarter as we still think this is a strong bull market. We still see reasons to think this economy is on really firm footing. Then we'll talk a little bit about the Fed and inflation as well. So let's start with the third quarter. It is what it is. After the best first 6 months to a year ever for the NASDAQ, the best first 7 months for the S&P 500, going back to 1997, stocks pulled back. We're not overly concerned by this. Historically, the third quarter is not that great for stocks. Historically, August and September could be kind of that rough indigestion period, honestly, into October as well. October is kind of known as a bear market killer. Think about a year ago where we were sitting right here in the middle of a bear market that did end in the month of October. So we knew some of these things. We weren't overly surprised. I mean, one of the reasons we've been so optimistic about this year from an investments point of view is so many people doubted. Funny thing happened in the middle around summertime. Some of these long-term bears started to get a little more optimistic, saying, we're sorry. Now we're bullish. The contrarian in me said, oh my, wouldn't it be something if stocks started to have volatility and pullback? And that is exactly what we saw in the third quarter. So that's where we were. Now, the story really of the third quarter, along with stocks finally pulling back, was yields, right? Yields continue to move higher. 30-year yields hitting the highest levels we've seen in decades. 10-year yield doing similar, I think highest since 2007. The big question is why? Why are yields going so high? And what did that do, right? Let's hit rewind for a second. Remember, if yields go up, bond prices go down. They're inversely related. So bonds had a really rough go of things the last couple of months as yields have continued to move higher. Our case is it's sometimes the simplest answer is probably the best answer. It's the economy. The economy continues to be really strong. That is why, in our opinion, yields continue to move higher. Now, we do think yields are probably near a pretty significant peak here fairly soon. But the realization, let's talk about the economy for a minute. The realization that there's no recession coming. There hadn't been a recession coming the whole time. We've been talking about that. Just look at the consumer, right? The consumer. Those of you listen to this, the consumer makes up about 70% of GDP. That's our economy, how our economy is doing. If the consumer is strong, they're going to continue to spend. We have seen a strong consumer this whole time. Just the last 3 months, consumption has run at an annualized 7%. That's really strong. That's probably going to come back to earth, don't get me wrong. But that is a good thing. Our economy keeps creating 200,000 to 300,000 jobs every single month. Things aren't perfect. There are worries. There are concerns. We understand that. But when you have a consumer that continues to consume, first off, but also real wages, right? People are making more money. Their wages are growing faster than the inflation rate, which inflation's coming back down pretty quickly here. I'll talk about that soon enough. Those are all really positive things. And let's talk about manufacturing for a second, kind of that canary in the coal mine. A lot of soft data, meaning surveys on manufacturing, have continued to say, things aren't great. Maybe there's a recession. But then you look at the hard data. Probably don't realize this. Real construction, if you look at manufacturing, is at an all-time high. Construction's at an all-time high. If you look at different things, durable goods orders, some of these other hard data pieces on the manufacturing side of things, manufacturing is really coming back. That, again, is kind of a leading indicator for our economy and a reason we think, 2-3 quarters from now, we could continue to have a really strong economy led by manufacturing and the consumer. Full disclosure, housing, obviously with yields going higher, it's kind of upset the apple cart in housing, got some issues there for sure. And it's not perfect, like we said, but we still don't see recession. We still see a really strong economy. Let's talk about the Fed for a minute here. So the Fed and inflation, kind of put them together, if you will. So inflation is really coming back down. We continue to see things. Keep this real simple. Shelter makes up about 41% of core CPI. That is, again, that's consumer price index, how prices are doing. Keep it simple. Shelter is really coming back. That's been one of that stubborn parts of inflation the last couple of years. We're seeing this in the private data. Places like Zillow and Apartment List, rent prices have come way down. That's going to work its way into the government's data. Those are positives. Again, the supply chain concerns we had a year or two ago, those have really opened up. There's lots of positives that say, you know what? Inflation is coming back down. And what does that mean? What does it all mean for the investors listening? It means the Fed didn't have to hike rates anymore. The Fed had an extremely aggressive rate hiking schedule the last year and a half, give or take. We think think the Fed is done hiking. Now, you're going to hear some of that on TV. Are they or aren't they? We think they are. And to be honest, as we head out into next year, maybe call it the second quarter next year, if the inflation rate continues to come back down like we think it can, we'd be optimistic the Fed potentially could start to cut rates sometime into next year. But we'll worry about that when we get there. Bottom line, if the Fed is done hiking, inflation keeps coming back down, the consumer is strong, manufacturing is strong, these are real positives for the stock market. Let's finish things up here with the stock market in the fourth quarter. Historically, fourth quarter stocks do really well. Historically, they don't do all that well in the third quarter. Oh, by the way, the first half of a pre-election year, historically, stocks do pretty well. Things are kind of, Mark Twain said history doesn't repeat itself, but it often rhymes. Things are kind of like that. So again, we're optimistic. We're going to see a pretty solid fourth quarter. Yes, stocks were down in the third quarter, but the S&P was still up 13% for the year, right? Your average fourth quarter gains about 4% for the S&P 500. We think we could have a little bit more than that. Here's one for you. When August and September are down at least 1%, like they just were, going back to 1950, happened 13 times. The fourth quarter is higher, 12 of them. Up over 7% on average. Now, you've got these different things. There's a lot of negativity. People got very fearful on the recent correction that we had, or I should call it recent pullback that we had with the weakness, seasonal weakness. That's normal. What's going to spark us? What's going to get the seasonality and get prices to continue to go higher into the end of the year? We think it's earnings. This earnings season is going to come out right now as you're listening to this, and we think earnings are going to come in better than expected. Corporations are going to say the economy is still strong, the consumer is still strong. We've seen this the last couple of quarters. Earnings are coming better than expected. We think that could be the case once again. So let's put a bow on all of this. Really great year so far. Third quarter was rough. Optimistic this is still a bull market being led by a strong consumer, being led by the fact the economy continues to surprise to the upside. We think this bull market still has legs, and we're optimistic we're going to have a pretty good fourth quarter, maybe even a good start to next year, but we'll worry about that when we get there. With all of that, I'm honored to chat with everyone with the latest fourth quarter market update. And you know what? I'll see you in 2024. Take care.